For a long time, individual investors have sort of been conditioned to have a point of view of a split between stocks and bonds in their portfolio. Some investors might also dabble in real estate, for example, but there is an enormous growing interest in investments that are known as alternative investments.
Increasingly, I think they're looking at alternatives such as venture capital as an appropriate part of that story.
It is a compelling addition to somebody's investment portfolio if done appropriately.
Venture is so interesting because it is not correlated to the other asset classes, so it travels on an entirely different journey.
It has what we would call a negative correlation at times with the public markets.
And it comes with, the need to be incredibly patient and lock up your capital for a longer period of time than you would if you had any sort of public market equivalent. Now it comes with a tolerance for a higher incident of loss at the individual company level than a lot of other strategies. But a value creation that takes place with ultimately highly successful companies that you can participate in before they're available to public investors is a very, very compelling place to play.
Venture is an excellent investment if you have patience and you're interested in the potential for outsized returns.
An investor in venture capital is looking to build long-term wealth.
What people have done historically is they've ignored the private market and waited for companies to go public in order to invest. Today, companies stay private longer. The burden of being a public company is extreme, and there's ample capital in the private markets.
And as a result, a lot of the outsized returns that come from investing in individual companies that go on to great success are accruing much more to private market investors than they are to public market investors.
And so venture capitalists are trying to put money away that will grow for them down the road.
This is a long-term asset class.
So we get in early, we watch the company grow, and that's part of what venture capital does, is gives you that opportunity to join when the company is at its early stages and take that journey all the way up to pre-IPO.
Investors often ask what to expect when they invest with us, how that portfolio manifests over time.
We intentionally build a portfolio that's about 25 to 30 companies, diversified on stage, sector, and geography. 2/3 of the companies are seed and Series A, about 1/3 are growth.
One of the key elements in our model is by investing across stage, we're doing some deals that are exiting in years 2, 3, and 4, while the early stage deals may percolate along and grow in value and maybe exit in years 4, 5, 6, and 7. They can take a little longer to mature.
It's a long-term asset class, and it takes a long time for these companies to materialize from those early investments, but when they do, the returns can be quite dramatic.